Welcome back, everyone. I hope you're having a great day. And in this episode, we're going to take a look at 5 dividend-paying companies who have paid a cash dividend to their shareholders for over 100 consecutive years without any interruptions. These 5 companies have paid out cash to their investors every single year through any recession and depression we've seen for over the past 100 years. So regardless of the market environment, these companies still generate income and cash flow in order to return that capital to their investors. These are some of the most resilient businesses in the world, and we're going to take a look at 5 different companies, go over their current operations, and of course their dividend history. But before we jump into stock number 1, I am going to ask you to please hit that like button and subscribe. I'm the Gen Z investor, and on this channel we talk about the stock market, everything dividend related, and of course we track my personal stock portfolio that is at a value of $180,000. So please hit that like button, subscribe for future videos, and we're going to jump right into the first stock for the episode, and that is ticker PG for Procter Gamble. The company currently trades for $138 per share. They're down 12% on the 1-year chart, but if we zoom out and take a look over the past 5 years, the company's share price is up close to 70%. They have a current forward PE ratio of 23.5 and a nice average dividend yield right around 2.65%, with a massive market cap at $326 billion. And Procter & Gamble has built one of the strongest portfolios of consumer products out of any company in the world. They currently have the number 1 or number 2 product position across all 10 of their consumer categories, which include baby health, feminine products, fabric, home, and many, many more. And just by looking at this chart, these are all recognizable brands that are found in every store all across North America and on an international level. So these products sold by Procter & Gamble hit every type of consumer, they're used every single day, and can be found at every type of shopping environment you can see in the market. So this company has built out a portfolio of some of the best brands in the world. And because of this massive portfolio, they've continued to grow revenue every single year, even for a company of this size. $66 billion of total sales back in 2018, they've seen continuous revenue expansion to over $80 billion in the trailing 12 months. And as the companies continue to grow sales, they're not solely reliant on only one area of their business in order to contribute to that top line growth. All 10 of their consumer categories continue to grow sales every single year. Of course, some categories are growing at a faster rate than others, but it's great to see that across their entire product portfolio, they're still able to generate growing revenue year in and year out. And Procter & Gamble is one of the best companies of returning cash to their shareholders. We can see over the past 4 years, they've returned $65 billion in the form of dividends and share buybacks to their shareholders. And if we take a look at the past decade, $141 billion has been spent on their dividend and share buybacks, so they generate a ton of profits and cash flow and return it to their investors, maximizing total shareholder value. And we can see if we take a look at their outstanding share count, you will gain a greater percentage of Procter & Gamble's business just by owning their stock, because they had 3.1 billion shares outstanding back in 2009, and we can see a continuous reduction all the way down to only 2.48 billion as of the latest quarter. So the single share that you own is worth more and more of the company. And of course, if we take a look at their dividend history, which is the focus of this episode, they've been paying out a growing dividend for 66 consecutive years, so they are a dividend king. But not only have they been growing it for 66 years, they've paid out a consecutive dividend without missing a single payment for 132 years. That dates back to the late 1800s. This company has not missed a payment to their investors. They have returned cash for 132 consecutive years, which is absolutely remarkable to even think about. Through every sort of depression or recession we've seen, this company's continued to pay out their dividend to their shareholders, which is absolutely incredible. And if we take a look at that dividend, they have a yield at 2.64%, a payout ratio of 63% of their net income, a 5-year dividend CAGR at 5.8%, and their dividend is considered 99 or very safe, the highest dividend safety score possible. So Procter & Gamble, a company we use their products of every single day, is the first company to be paying out a consistent dividend every single year for over 100 consecutive years. And I see no signs of slowing down with PG. I think they're going to generate consistent and growing revenue and profits for long into the future. And that dividend will continue to be paid out and grown each and every year as well. So this company was the first name we're going to take a look at that's been paying out that dividend for over a century. And now if we jump into stock number 2, we have ticker CHD for Church & Dwight, another consumer staple company trading for around $83. Their share price has declined 16% on the 1-year chart. They have a current forward P ratio of 26.9, a lower dividend yield at 1.3%, with a market cap just above $20 billion. And similar to Procter Gamble, this company doesn't have as diverse of a product mix, but they own and operate and sell products with 14 different power brands. They generate 85% of their sales from these 14 brands right here. They consider their 14 pillars of their business. And if we take a look over time, since 2004, where they generated $1.5 billion of total revenue, every single year they've seen total revenue expand, and they've also made continuous acquisitions. We can see every single year the company's acquired more and more companies, building out their product mix, leading to continuous revenue expansion to over $5 billion of total revenue in 2022. So continuous revenue growth over the past 15 years, continuous expansion of their product mix is exactly what you want to see. And taking a look, as they've continued to grow revenue, earnings per share has been expanding as well. We can see EPS growth rates of 9.3%, then 9.6, 17, 8.8, and many more going forward. 2022, they did have a tough period. They stated inflationary increase to their cost of goods sold hurt their EPS slightly, but going forward over a prolonged period in the future, for their long-term investors, they're forecasting anywhere between 6 to 10% long-term EPS growth, which is great for us shareholders. And taking a look, they do have a large product mix hitting the market in 2023 and beyond, and they will continuously be expanding their 14 power brands. Taking a look at their dividend history, 122 consecutive years of dividends without missing a payment, very, very impressive, and they announced a 4% dividend increase for 2023. So if we take a look at their dividend, they do have a minimal starting yield at 1.3%, but over time, the share price appreciation plus this dividend will continue to compound. They have a dividend payout ratio of 35% of their net income, and their 5-year dividend CAGR is right around 6.7%. And the company's current dividend safety score, again, similar to Procter Gamble, is at the highest level possible, coming in with a 99, so it is considered very safe and unlikely to be cut anytime soon in the near or long-term future. And if we take a look at their shares outstanding, they return a ton of capital to investors in the form of share buybacks as well. 292 million shares outstanding back in 2011. That number has continued to decline to only around 246 million as of the latest quarter. So overall, Church & Dwight was stock number 3 of 5 dividend-paying companies who have been paying out a growing and consecutive dividend for over 100 consecutive years. Next, we're going to move right into stock number 3, and that is ticker CL for Colgate-Palmolive. The company currently trades for $73 per share. They're down 7.74% on the 1-year chart, and the company is trading on the lower half of the 52-week range with a current forward PE ratio of 23.6, a dividend yield at 2.5%, and a market cap just above $61 billion. And if we take a look at the company's product mix, they sell goods in 4 main consumer categories with a main focus on oral care, pet nutrition, home care, and personal care. And in their oral care division, which is their largest and most prominent part of their business, their name brand Colgate has the #1 toothpaste line within the consumer segment. Then of course they also have very other recognizable names within soft soap, Irish Springs, and Ajax across all their different business categories. And of course, as they've been able to continuously expand this product mix, like Procter & Gamble, like Church & Dwight, jumping over to their income statement, total revenue has seen continuous expansion year in and year out as well. $15.5 billion back in 2018, continuous growth every single year to just below $18 billion in the trailing 12 months. And as the company's total revenue has been expanding, they've taken that generated profits and returned a ton of capital to their investors, not only in that dividend payment that's been out for over 100 years, but also by buying back a ton of shares as well. Back in 2009, the company had over 1.049 billion shares outstanding. That number has seen a continuous decline quarter after quarter to only around 839 million as of their latest quarterly report. So as an investor, you are getting a ton of appreciation from stock buybacks. As well, if we take a look at that dividend, 127 consecutive years of dividend payments without missing a single payment is absolutely impressive. This company is a dividend king with 59 consecutive years of dividend increases. And over the past decade, they've returned $30 billion of capital to their investors in the form of dividends and share buybacks. And the company's dividend CAGR during the past decade is at 5%. So if we jump over to the dividend scorecard, like we saw a 2.5% dividend yield, a payout ratio right around 62%, and their current dividend safety score comes in with a 90, which is considered very safe, so no dividend cut or slowdown coming anytime soon. So Colgate-Palmolive was stock number 3 of companies that have been paying out their dividend for over 100 consecutive years. And now if we continue on into stock number 4, we have the first company included in the video that does not operate from the consumer sector. We have ticker TD for the Toronto Dominion Bank. The company currently trades for just below $70 a share, and their share price has fallen 18% on the 1-year chart. But to start out 2023, over the past few weeks, the company has been on a rally, up 8.6% to start out this calendar year. The company does have a current forward PE ratio of 10.3 and a very high dividend yield right around 4%. And this company is a major player in the financial sector. In terms of all the banks in North America, this company ranks 5th in terms of total assets, deposits, market cap, and reported net income. And if we take a look at just the Canadian rankings, they are the largest Canadian banks in terms of assets, deposits, and net income during the past year as well. And if we take a look at their latest quarterly earnings, this company generates a ton of profits from the United States. So although this company is a Canadian bank, they generate around 60% of their bottom line from Canada and the remaining 40% from the United States. So we can see 31% of their profits come from their US retail banking sector, and they also have an investment in Charles Schwab that generates 8% of their profits as well. So around 40% of their net income directly comes from the United States, so they operate pretty much evenly or diversely all across North America. And if we take a look at their latest 2022 performance, they had a very strong year. Revenue was up 15% year to year, earnings per share of $9.47 was up 23%, so an absolute explosion in their bottom line, and they also saw expansion in their volume and margin across multiple business segments. And if we take a look, this company generates consistent and growing earnings year in and year out. They pretty much print money. It's absolutely incredible, this company's ability to generate consistent earnings growth. Their 5-year CAGR in reported earnings is 10.6%, and their earnings per share growth is at 11.5% over the past 5 years as well. And remember, during this 5-year average, we went through a global pandemic that was supposed to decimate the financial sector. During 2020, this company still generated $11.8 billion of total earnings throughout a period in time in which financials were supposed to get destroyed. They were supposed to have profits decline to nothing. They were expected to lose money. Loans were expected to be lost. But overall, this company still generated a ton of profits during that period. And overall, we can see they continue to grow to record highs of over $17 billion in 2022. And if we take a look at their dividend history, this company is the definition of a dividend king. They continue to grow their dividend year in and year out. They've grown it at a CAGR of 11% since 1995. They have a 166-year continuous dividend history with an expected payout ratio between 40 and 50%. 166 years of consecutive dividends being paid out. Of course, like I've mentioned for all these companies, they have not grown their dividend for this entire period, but they have not missed a dividend payment in 166 years. That means no one alive or even people's grandparents weren't alive to see this company start paying out their dividend, which is absolutely incredible to think about. And overall, if we take a look at that dividend, the nice yield right around 4%, they pay out $2.75 per share per year, a 40% payout ratio, and a 5-year dividend CAGR right around 8%. And if we take a look at their dividend safety score, that comes in with an 80. So overall, this company's dividend is considered safe, and I do believe they will continue to grow it for many years down the road. So the only company included in this episode today that does not operate in the consumer sector is this Toronto Dominion Bank. 166 years of consecutive dividend payouts is absolutely insane. So they come in as stock number 4. And now if we move on into the 5th and final company we're going to take a look at in this episode, that is ticker GIS for General Mills. So we are jumping back to the consumer sector. They currently trade for $76 per share and are up 13% on the 1-year chart. They have a forward PE ratio of 18.4, a nice dividend yield at 2.84%, and a market cap right around $45 billion. Over the past century, General Mills has done an incredible job of not only maintaining, but expanding their large product mix of market-leading consumer food products. They own the most popular brands such as Annie's, Betty Crocker, Bisquick, Blue Buffalo for pet food, Bugles, Cheerios, Cinnamon Toast Crunch, and many, many more. These are products you can find in every grocery store in every aisle all throughout North America. And this continuous expansion of their product mix has allowed them to boost up their income statement every single year, generating more and more revenue. $15.7 billion of total sales back in 2018 has continued to grow every single year, all the way up to $19.3 billion in the trailing 12 months. And if we take a look at their latest quarterly performance, the company's organic net sales growth was up 11% year over year, their adjusted operating profit grew 7%, and their diluted earnings per share was up 12% as well. These are pretty impressive results for a boring food consumer good company. And if we take a look going forward, they actually updated their guidance for fiscal year 2023. They're projecting higher sales growth between 8 to 9% over the entire year, higher adjusted organized profit growth up 3 to 5%, and they believe they will have 90% free cash flow conversion during this next year as well. And another company that's had a very incredible dividend history, they've paid out continuous dividends for 124 years without interruption. Of course, throughout 2018 to 2020, the company did improve their balance sheet. They only maintained their dividend at the same rate for 3 consecutive years. That's why I have this company as number 5 in the video. They've not done an incredible job of growing it every single year, but for 124 consecutive years, they've been paying out a dividend to their shareholders without interruption. And going forward, I do believe that trend will continue. The company's payout ratio is manageable, right around 28% of their profits, and the company still continues to buy back more shares, allowing them more room to grow the dividend in the future. If we jump over to Simply Wall Street, the company does have a dividend safety score of 69, so it is considered safe, and another company that has been paying out dividends for over a century with no signs of slowing down. So overall, we're going to kind of wrap up the video here. General Mills was stock number 5. We went over 5 companies who have been around for more than anyone on earth. They've been paying out dividend for longer than any single person alive has been alive. These companies will continue to pay out dividends going forward for many years. I think a lot of them have the ability to continue to grow that payment to their shareholders going forward as well. And overall, these brands have such strong, product diversification. They have such strong brand names. They're set up, their logistics already built out where they operate all around the world. It's kind of hard to see any competitor knocking out these brands from their market leadership positions. And 4 of the 5 companies we've gone over operate in the consumer staple category. It just shows how resilient that sector really is, where these companies sell products that are used every single day by consumers, and through any single type of market environment, recession or depression, they're still able to generate sales and profits and pay out that dividend to their investors through every time of economic hardship. So if you're looking to build a portfolio with stable and growing dividend income from companies who have the ability to pay it out through any type of market environment, definitely 5 companies in this episode that are definitely worth taking a look at that have been paying out a dividend for more than 100 consecutive years. So I hope you appreciated the video. I hope you enjoyed it. Let me know your comments down below, and I will see you in the next episode.